What if a completely empty trading floor is actually the quiet before a very massive storm? Right now, the global football season is emptying out trading rooms across the region, and this distinct drop in volume is creating a tactical accumulation window for long-term retail capital. I have been tracking the institutional flow all month, and this comprehensive Singapore market focus report published by DBS Group Research stands out because it targets exactly where the post-distraction liquidity is expected to snap back first. DBS Group Research has pinpointed 9 specific Singapore exchange names that are well positioned to lead a major market turnaround the moment July arrives. Before we dive into the specific stock data, let us establish a very clear ground rule for today's video. This breakdown is focused purely on tracking the primary institutional research exactly as it is published by the bank. My role as market correspondent is to report on analyst research, earnings results, and market developments exactly as they are, without applying any external forensic filters, safety margins, or strict dividend yield hurdles. Think of this as a direct look into the institutional playbook, showing you exactly what the street is telling its clients for the second half of the year. While thousands of local investors are staying up until 2 in the morning watching football matches and waking up completely exhausted, such as my husband, the entire Singapore exchange is experiencing a synchronized drop in trading activity. This seasonal quietness is not driven by broken corporate business models or a sudden macro deterioration. It is purely a product of human distraction. Because the underlying fundamentals of these major companies remain untouched, the softer prices we are seeing throughout June create a classic tactical accumulation window. Looking at the market backdrop metrics, the Straits Times Index is demonstrating significant underlying structural strength. The index has held firmly above the 4,700 level, showing a steady upward bias despite the seasonal drop in daily transaction volumes. The research house has set a clear year-end target of 5,250 for the index, anchored heavily by Singapore's growing status as a global safe haven capital destination, expanding electronics exports driven by artificial intelligence infrastructure and steady financial services performance. It is important to note that the oil price figures here reflect the assumptions from the DBS research report as at June 4, 2026. Their base case model assumes that a formal agreement between the United States and Iran will be finalized by the end of the second quarter, which should guide oil prices down into the 85 to 90 United States dollar range. However, the analysts flag a bear case risk where renewed geopolitical tensions could easily push Brent crude back above $110. The historical data compiled by the brokerage shows that this summer slowdown is a highly repeatable market anomaly. During past major international football tournaments, the total value traded across the local bourse dropped by anywhere from 5% to 48% while the matches were actively underway. The critical lesson for retail buyers is what happens next. The moment the final whistle blows and the sporting distraction ends, historical trends show that trading volumes recover rapidly, causing transaction activity to snap back sharply. The current trading cycle is projected to run from June 11th through July 19th, 2026. Because this temporary drop in volume is entirely behavioral rather than structural, the street views these softer June price points as a classic tactical entry window. Investors who build positions quietly during this seasonal volume drain stand to benefit from the post-tournament volume revival when the broader market wakes up in late July. Let us move directly into the specific sectors, starting with banking. Overseas Chinese Banking Corporation emerges as the preferred bank pick for DBS Group Research in this cycle. The analytical team views the lender as highly resilient within an economic environment characterized by persistent inflation without an imminent threat of a recession. The bank also remains a primary beneficiary of global safe haven capital flows entering Singapore, which continuously helps sustain its asset growth and balance sheet strength. Turning to the telecommunications sector, Singapore Telecommunications was recently upgraded to a formal buy rating by DBS Research. The central thesis for this upgrade rests on a major overseas catalyst, anticipated mobile tariff hikes in India scheduled for the second half of 2026, which would significantly lift associate earnings. The analysts state that the recent price correction in the stock represents a healthy reset of market expectations, making the current entry point tactically attractive before these catalysts materialize. Two prominent industrial and technology leaders feature in this section. First, Venture Corporation is framed by the research house as a balanced investment offering a combination of capital growth and dividend yield, supported by improving underlying electronics earnings and building momentum from artificial intelligence infrastructure orders. Second, Sembcorp Industries is highlighted as a clear beneficiary of elevated global gas prices, and after an approximate 10% pullback from its peak share price, its risk-to-return profile has become significantly more attractive for energy transition investors. The upgrade for Singapore Telecommunications highlights an interesting divergence in how different players process near-term volatility. While general trading sentiment often treats a sudden price drop as a reason for extreme caution, institutional houses view a correction as a healthy mathematical clearing of excess expectations. Whether the anticipated tariff adjustments in overseas markets like India convert into meaningful core earnings during the second half of 2026 is the primary operational variable that local income investors need to monitor closely. Moving into the major real estate developers, both are expected by the brokerage to experience meaningful catalysts in the second half of 2026. City Developments Limited is approaching an upcoming strategic review by management that the street notes could potentially unlock up to 7 billion Singapore dollars in asset value across its property portfolio. Meanwhile, UOL Group is awaiting a formal corporate update regarding the major Marina Square redevelopment project, which is expected to reprice the intrinsic value of its land bank once details are public. Starting with the preferred large cap S-REIT designated by the brokerage, the analyst team favors CapitaLand Integrated Commercial Trust because more than 90% of its assets under management are located within stable Singapore infrastructure. This concentrated domestic footprint supports highly resilient retail and office operations, stable distribution yields, and an estimated 3% distribution per share compound annual growth rate. The next trust is CapitaLand Ascendas REIT, which is positioned by the brokerage as a structural beneficiary of expanding artificial intelligence and cloud computing infrastructure requirements. The investment house highlights the upcoming One North Kampong AI development plans as a key driver that, alongside accretive acquisitions, supports a projected 2% distribution per share compound annual growth rate through organic expansion. Rounding out the S-REIT coverage is Mapletree Logistics Trust. The analysts highlight its distribution yield, which currently sits comfortably above the 6% mark, alongside a valuation that trades at a discount of less than 1 times its price to book value. The house indicates there is ample scope for management to engage in capital recycling and asset redeployment to optimize the portfolio over the coming quarters. The entry window closes incredibly fast. In this market, the difference between a quality income stock and a dangerous dividend mirage is regularly decided in a single trading session. By the time this institutional analysis reaches you as a free subscriber, the tactical window has already opened, and it often closes before the broader market has fully processed the upside. Members of Iggy's elite investors do not wait around for information to go cold after the market has already priced it in. They get the critical information when the numbers still matter, receiving zero-day forensic breakdowns, the full red zone watch list, and institutional-grade cheat sheets at the exact moment the setup is live. For 9 Singapore dollars a month, which is less than a kopi and kaya toast set at Raffles Place, you stop being the passive exit liquidity for the broader market and start acting as the analyst. It changes your entire posture from reacting to news to anticipating the institutional money flows before they happen. The idea that international football tournaments can influence the liquidity and pricing of local commercial real estate and banking stocks is a fascinating reminder of how human behavior impacts the markets. DBS Group Research has presented a clear data-backed argument showing that volume drops during June create a repeatable anomaly on the Singapore exchange. The final whistle at a World Cup does not tell you whether a company can pay its dividends. It just tells you the distraction is over and the money is coming back. DBS Group Research has made a compelling case that the June volume lull creates a repeatable entry window, and the historical data backs that up clearly. But as someone who came to investing after a career spent thinking carefully about what works and what just looks like it works, I have learned to ask the second question. The first question is whether the window is open. The second question is whether what you are buying through that window is actually worth owning for the next 10 years, not just the next 10 trading sessions. A seasonal pattern gets you into the room. The balance sheet determines whether you stay. So as the tournament winds down and the institutional liquidity starts flowing back into the Singapore exchange, my suggestion is this. Use the window to do the reading, not just to act on the excitement. Watch whether these 9 names hold their distributions as the macro picture evolves. Watch whether the India tariff catalyst for Singapore Telecommunications actually converts into earnings by the end of the year. Watch whether the Marina Square update for UOL delivers or disappoints. The window is a starting point. The fundamentals are the verdict. Angela's content summarizes publicly available market news, analyst research, and earnings data for informational purposes. Iggy provides the investing iguana's forensic ratings and analytical verdicts. Angela's role is to recap noteworthy developments across the SGX market without applying analytical filters or investment recommendations. Always read primary sources and consult a MAS licensed financial advisor before making investment decisions. This content is produced for educational and informational purposes only. I am not a financial advisor. I am a retail investor who applies forensic analysis to my own portfolio and shares that process publicly. Nothing here constitutes a recommendation to buy, sell, or hold any security, and no specific target prices or personalized financial advice are offered. All data is sourced from public filings and verified sources. Where data is unverified, it is explicitly flagged. All investments carry risk, including the potential loss of principal, and past performance is not indicative of future results. If you are making investment decisions involving CPF, SRS, or personal capital, please conduct your own due diligence or consult a MAS licensed financial advisor before committing funds.